I'm going to show you how to pay less taxes if you live outside of the US. Stay around and I'll tell you how. Hi, my name is Victor Delerme. Welcome to Office Hours. I'm going to tell you the information that you need to hear so you can save money on taxes.
I'm a U.S. citizen living abroad but still earning U.S. income. Do I qualify for the Foreign Earned Income Exclusion?
So it all depends, right? Welcome to my world. I worked a lot with international clients. We have clients in Latin America. We have clients in the Caribbean. We have clients in Europe. I mean, you name it. So you're asking me how to file your taxes or how to lower your taxes or what are the opportunities if you live abroad, right? It doesn't matter if you own a business or if you work for a company outside of the US. The general rule is that you would qualify for the Foreign Earned Income Exclusion, which basically the IRS will give you a tax break on the first $120,000 that you earn, thereabout. But you need to be living outside of the US, right? So as a general rule, you need to spend 6 months outside of the US in order for you to qualify, or 330 days in 12 months, right? So yes, so the first $120,000 that you earn will basically be tax-free. But then again, you need to be a resident for tax purposes of the country in which you're living in.
I own an LLC in the US but live in Europe. How do I handle US tax obligations while avoiding double taxation?
Well, congratulations. If you own a business in the US, but let's say you live in Spain or Portugal or Germany, you will have obligations in the US, right? So remember that the US has tax treaties, tax relationships with most countries in Europe, right? And you own a business in the US, but you are living in Europe. So remember that there's two conversations that we need to have here, right? We need to have the conversation about yourself as an individual. If you're a US citizen, you are taxed or you pretty much have to report your income on a global basis, right? So your personal income that you earn while you're living in this case in Europe, it needs to be reported. And then if you also have personal income sourced in the US, that will also be a part of the tax calculation on a global basis, right? But your question was primarily about your business, right? So yes, you will have to have a tax reporting in the US at the federal level and the state level, right? So let's say that you have a business in New York, you will have to file a federal tax return with the IRS and also a tax return with the state of New York, state of California, you name it, right? Yeah, so you will have to file those returns, the federal return and the state return. And that primarily is for the income that business generated, right? So, but there will also be spaces for you to have the right tax planning, right? So remember that, if you run a business, there's always going to be space or latitude for you to have deductions, credits, write-offs that are important for you to run the business. So let's make sure that you have a tally of all the income and all the expenses that you have to utilize in order for you to run the business. Make sure that you have the right accounting system. And of course, make sure that you have the best tax strategist, best CPA that you can work with, just to make sure that you have the right plan in place since you're working in Europe, but then you have a business in the US.
I haven't filed taxes in several years. What are my options for getting back in compliance without heavy penalties?
So you haven't filed your taxes in many years, okay? And I understand, that's situations to happen. Listen, the government understands that. The IRS understands that. And typically the IRS will give you, as a general rule, obligations for the last 6 years, right? So if you haven't filed taxes in a number of years, bear in mind that the IRS is definitely going to look for the last 6 years. But hey, let me tell you exactly how is it that I help a client with a situation very similar. First of all, I understood the business my client was in. I understood the situation and the level of income that my client had during those years, right? So yeah, the first thing we did was making sure that we have the right information for us to contact the IRS on the client's behalf, right? We obtained power of attorney and then we got copies of the tax records that he had for those years, right? And then we contacted the IRS. We obtained the record of accounts, tax transcripts, for us to understand what was the level of income and the information. We wanted to corroborate the information that our client had along with the information the IRS has, right? Because sometimes you may have information that is not complete and the IRS may have it. And sometimes the IRS may have information that, vice versa. So yeah, as I said, 6 years, we looked at the information and then we had the right accounting records. We formulated a tax plan for us to support our clients, and we were able to help our client minimize the interest and penalties associated with late filing of the tax returns and late payments of the taxes. And that's how we help our clients.
I'm an expat with investments outside the US. How do I report and minimize taxes on my foreign income and gains?
Yeah, so congratulations if you have investments and you have income from outside of the US. The important thing, right, as I said before, if you're a US citizen, the IRS is going to tax you on your global income, right, in all the sources of income that you have earned. It doesn't matter what the income, if it's sourced in the US or if it's sourced outside of the US. Two things, right? If you paid taxes on the foreign income or the foreign dividend income or capital gains outside of the US, and there's taxation where those gains or income is sourced, if there's taxation there in that country, the US may have a tax treaty with the country in which your capital gains, your dividend or interest income is sourced. Okay, so if you pay taxes in that country, the likelihood of you receiving a credit for those taxes is somewhat high, right? So then that way you avoid what's called double taxation. So the important thing here is to obtain a list of all the income that you earn outside of the US and then verify whether you pay taxes on those income. Oftentimes, our clients with 1099 information with interest, dividends, and capital gains may have capital gains that is sourced outside of the US. But the 1099 itself will tell you that taxes have been paid in that country, right? So if that's the case, then the US will give you a credit for the taxes that you paid in that country. That way you get to minimize your taxes a little bit. Again, my name is Victor Delerme, and thank you so much for watching this video. And guess what? I'll see you next one.